7-9, July 9th, July 9th, Wednesday. It's a little bit of a hump day here. Hope everybody's doing well. 8:45, Chris Johnson here with the market open. Hope that everybody can hear me, everybody can see me well. Somebody let me know. There it is. Thank you very much, Daniel. Appreciate it as always that you're giving me the heads up there. You can get me, you can hear me. So lots going on, or maybe a little going on in the pre-market this morning. Very, 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 very quiet evening, it looked like, except for a couple of headlines from Hong Kong right now about the coronavirus maybe making another resurgence there. Everybody glad. Thank you very much for the knocks there. John, good to see you as always. Hope you're not too hot down there in Orlando. Somebody I saw on the menu or on the chat there talking about the land of no indoor dining. Sorry about that, guys. I think that's probably something that's coming to all of us as we kind of gear up and get ready for to battle down that curve again. This is not yesterday's Porter. This is today. It is hump day, Wednesday. We're ready to go, right? Or at least we should be ready to go. It is Thursday. I'm joking with you guys. Come on. You have to have a little levity every once in a while. One more day away from Friday, obviously. Today is, if you think about it, hump day is Wednesday, and we got it. We got that little push. I'm going to talk about that. Light volume yesterday. Good morning, everybody. I know, Peter, I'm joking with you guys. Little test. Make sure everybody's on their toes. So we're going to talk a little bit about the light volume trading that we saw yesterday. One of the things I want to talk is how to trade this market. Saw a real interesting article on Bloomberg last night, and it kind of got me thinking, you know, this is one of those things. I talk about the wall of worry trade, and that's kind of the school I was brought under, believe it or not. Back in the late 90s, learned about the wall of worry before it was really the wall of worry and the slope of hope. Saw something yesterday. Hey, Marlon, sorry about that. I will look at, you know, this wall of worry trade, which is probably the most incredible one that I've ever seen. And this article, we'll go into the detail in the slides, but how you trade this. Because a lot of people are struggling with how to trade. You and I have talked about this before. I just want to kind of revisit that. Let's go look at the slides real quickly. No worry, Val. Let's look at the slides very quickly here. Talk about what happened overnight. As always, I want to go over a couple of the headlines, what it's going to affect from the trading perspective as this morning. The weekly job numbers came out, and they were actually a little better than expected again. So we're seeing a trend that's actually positive there. Futures got a little bit of a bump here. You got the Dow up 45. NASDAQ alive and well. I don't know if Jerry's out there, but alive and well, up 60 basis points right now. It is really, really, really starting to shoot higher. Obviously, we'll see what happens as the trade goes on. For those of you that were with me yesterday, I think I owe Jerry maybe an ice cream sundae because we did close higher for the day. NEO is one of the tickers we're going to talk about, Daniel, as we get into it. But let's talk about what happened overnight. Where did the traders go yesterday? That's the question mark. Whether you know it or not, nobody was out there in terms of trading volume. And that's one of the things that I look at very closely because it usually tells you that you're getting to a fulcrum or some sort of turning point in the market. Not to say that that's going to happen here over the next day or two. It's just one of those things that's adding up. There he is, Jerry. There you are, Jerry. One of those things that's adding up in the back of your head that says, how much higher can the market go when you've got less volume trading it higher? And then we're going to talk about trading the wall of worry market. And I've got a stock of the day. I'm going to do something a little different than the buy, hold, sell on the headlines. I'm going to give you one stock. It's one that you're familiar with. I'll kind of give you a hint right now. One that I've been bullish on for a while, up almost 200% over the last month and a half or so. And we'll get to your questions with some free flow Friday. So got to look at the volatility index. Still, the VIX bounced around. Didn't do much yesterday. Closed a little bit lower after that rally into the afternoon. And that's kind of one of those concerns for me. You know, I look at it from the perspective of being long volatility is a play over the next month or so. And an August option right now makes sense. You might start to see a September option make sense as well. But really positioning for some volatility through earnings is where you want to be. That chart went away very quickly. We're still bouncing under that 30 level, and actually the VIX came down a little yesterday. Krieg, we'll get to actually plug play a little bit later. Got a downgrade this morning, and I think it's still a good opportunity. Downgraded to $10 per share. That's one of the things we're going to talk about trading this market and the volatility that it brings with it. So the headlines today: does a COVID-19 resurgence matter for the markets? Does it? I mean, that's almost a question to you at this point. If you look at the perspective of the headlines that we're seeing, Hong Kong and Tokyo overnight, we saw headlines that they're starting to see a spike again. The United States hits a new peak right now. You've got this push-pull over masks or no masks. And you know what? I'd like to do a poll at some point. Where do you stand on this? We're right now in Ohio. We've got a mask mandate that's going into effect. It went into effect here in our county last night. And you've got sheriffs coming out saying, "Hey, we're not gonna enforce this." It's one of these social things that's now turning into a little bit of a bitter battle. But the bottom line is none of these appear to bring down the market. We are indeed climbing the ultimate wall of worry. Whether it comes down to looking at, thank you, Don. Let's, you know what? I don't know if we can get a poll up here and running real quickly, but you know what? It's one of those situations where, hold on, I'm trying to go on the fly here. So when we look at this, none of this has brought down the wall of worry. Getting a little bit of science or silence right now, and there you go. Get that up there for you. I want to see what you guys have to say. Masks or no masks. None of this appears to bringing down the wall of worry. We're heading into earnings season. We've had a huge rally. People are looking at this from the perspective of earnings don't matter. Again, another sign of either that wall of worry, or is it getting ready to slide down a slope of hope here? So let's look at the data, and we're going to answer that question a little more here in a second. I'm kind of going around the circle on that. Weekly unemployment claims, 14 week in a row this morning at 8:30 of lower unemployment claims. So in this particular case, we're looking at it from a perspective of you're seeing those unemployment claims go up or down rather, but at the same time, look at what United threw out there yesterday. United Airlines coming out saying that they're going somewhere around 30 to 36,000 people that they may lay off here as soon as they can in October. You're going to see more of that from the airlines. I think that's a concern that everybody has to go, everybody has to look at it from the perspective of there's going to be a swell in that number as we see some of those PPP people get, unfortunately, unemployed here. But there are still these signs of optimism and green shoots. We're seeing signs from Europe right now that we're seeing an improvement in their economy. We're seeing it obviously in China right now, that their economy is starting to get back on. Look at what their stock market's done over the last few days here as everybody's getting back on board. So it's really hard to fight this fundamental story that appears to be building, even though when you look at the perspective of the numbers are still high. We're improving, but we're still coming off these very high numbers. It's a little bit of caution out there that you need to be taking. So when we look at that market that's moving up to these highs right now, this blew my mind. This actually came from that same Bloomberg article that I'm going to talk about in a moment. And a chart truly can speak 1,000 words. If you look at the market and the way that this rally has seen divergences from the group here. So in other words, almost that herding cats type of rally that I like to talk about. This is June 8th when everything was coming up. Airline stocks were coming up. Bank stocks were coming up. And so if you can't see this, you got Capital One. You've got the Jets ETF, which are the airline companies. JP Morgan, the QQQ is your green line here. ExxonMobil is your red line, S&P 500. So here are your cubes and your S&P 500, which have continued to go up. And when you look at Capital One, JP Morgan, Exxon, the Jets, everything going down. This is one of those situations where this market is truly going two different directions when you look at it from the perspective of companies and indices. The NASDAQ 100 hitting all-time highs right now, or getting back to those highs. The S&P 500 struggling to kind of keep itself in a trading range right now, along with the Dow. The bottom line here is you've got to stick with these winners right now. And that, I know that sounds so basic and almost one of those things that maybe a sixth grader could tell you, or maybe a middle schooler that's doing their investment contest in school. But the winners right now are the winners for a reason, and it comes down to that crowd or herd mentality. It's not going to change. Let's talk about what happened yesterday with the market here. So this is 34. Jerry, this is a good one. 3,400 or higher by year end if POTUS is reelected. You bring up a great point, especially with Biden making news today, coming out with some economic. He's got this economic vision of his, and he's leading obviously the polls. If you look at the betting polls, obviously that's what everybody looks at right now. 55, 60% against Trump's 40. It's going to be an interesting race for sure. Absolutely, for sure. So anyhow, when we look at what happened yesterday, and this is where Jerry won his ice cream. So incredibly light volume. This was actually, and I've got it highlighted, and I sent this to my night trader people last night. You've got the lightest volume on the S&P 500 ETF since February 19, which is right here, and obviously right before the proverbial poop hit the fan, right? You're not predicting anything that's going to happen. We're not going to see the S&P 500 go from that 3350 down to the 2250 that we saw. This is not an indication that that's going to happen. It is an indication that the market is floating out there. And like I said yesterday, having that possible wily coyote. So it is we need that volume to pick up. In other words, if you're talking about confidence in the market. Right now, the S&P 500 having a little bit of a confidence crisis as we're seeing, and maybe not a confidence crisis, but an issue as we're seeing that volume drop off. When you look at it on the intraday basis, and here's where the ice cream was really won. When you look at it, the last hour of trading, volume picked up. This is the spider shares, and we saw the spiders go from 3140 or the S&P 500 up to that 3160 level. This is one of those moves that just absolutely came in on volume pushing it, especially the last 5 minutes of the day. When you look at what happened with the IWM, it's a similar situation. IWM was looking at negative territory here, 140.2, and absolutely rocked into the afternoon, 142. That's your trading range, guys. If you want to look at it from the perspective of trading range, we talked about it on Tuesday. 142 and 140 right now on the IWM are your top and bottom of these ranges. And if we break through that 140, that is when things are going to start to get a little dicier, and we're going to start to see the volume coming into the downside. So let's go to the wall of worry. That's your intraday trading. For those of you that are looking for those levels right now, I want you to watch the IWM with that 142, 140, 140 cracking and giving way. And it did a couple times yesterday, is where you're going to start to see the traders start to get involved and start to sell. We are seeing a little risk off type of indication from the IWM, not yet from bonds. So, and that is funny. So we look at it from the perspective of, if that's going to break, we're going to see a little bit of a trickle down. And remember, earnings season really starts to get into swing. Bed Bath & Beyond. If you didn't see it last night, it was a question here yesterday, also in my night trader session at 11 o'clock. Bed Bath & Beyond, big miss, closing hundreds of stores. The stock was down 6%, 7%. It's going to be down a little harder than that today. That's a good indication of what's going on. And I just talked about that yesterday from the perspective of their back to school season is not going to be a back to school season. It's going to be a little bit of a trickle, and nobody's really going to know what to do. Watch these retailers as we head into the next couple of weeks, and you start to get an indication of whether this resurgence is actually going to slow down what we're doing. I heard a great interview with the CEO from Levi Strauss yesterday, who pointed out that when they have people coming into stores, they're no longer shopping. They're coming in, picking things up, getting the hell out, because nobody wants to mess with the store. That affects the bottom line, obviously. These stores are designed for you to shop around, go in for a pair of jeans, and end up walking out with a hat, a shirt, some socks, and maybe a pair of shoes. So You got to watch right now. The retailers have been starting to show a little bit of weakness here. Keep in mind that you're also going to have some of those that are associated with the home builders, as I talked about yesterday, that maintain their at least a little bit of sense of rally here. The herd mentality is in full show as of late. Nearly 23 trillion $23 trillion in global stocks made in the global stock rebound. I saw a number that was around 5 to 10 trillion here in the domestic markets. There's been a ton of cash made in this market since March. Yet, as the virus cases, and this is all from this article in Bloomberg, yet as the coronavirus cases climb across the U.S. and economic data signal continues weakness, the threat of extreme price moves becomes clear. All that's saying is that there is a big chance we're going to see a lot of volatility here over the next couple of weeks. When you read an article like this, they start talking about kurtosis moves, which are the moves that are out there on the wings of the standard deviation curve. To get all math nerdy on you for a second, we've seen 5 of those lately. Those usually happen once every couple of years, maybe once a year if you stretch it out. We've seen 5. A market that is fraught with volatility. Traders, investors know the risk. I mean, they see the headlines every day. They are ignoring them or, again, just climbing that wall of worry. Folks, I've been studying the wall of worry and that term, as I said, since 1998. I've been looking at investor sentiment since 1998. Pioneering different ways of looking at it, whether it's put-call ratios, whether it's analyst recommendations, short interest. I mean, there are a ton of them out there. Looking at volatility on an individual stock and the VIX for individual stocks here. This is by far the biggest wall of worry I've ever seen. Ever, 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 ever. You could claim that, back in Alan Greenspan days when we had the bubble, that was a great wall of worry, and it was. This one puts them all to shame. So how do you trade that is a big question. When you talk about a wall of worry, you've got, as this article puts it, hysterical markets. And I think that's a little bit off the cuff, but they're posing particular challenges for systematic strategies. So those that are buying hold, let's say, to make it easy. One that targets volatility have struggled to cut positions fast enough during drawdowns, and then catch up with the rally. Forget about everything else that is said there. Focus on those 2 points. Fast enough during drawdowns and catch up with the rally. How do you trade it? Well, I've been talking about it for a while. The market will get ahead of itself. Realize these things here. The market's going to get ahead of itself because it's acting as a herd mentality. It means overbought will tend to become incredibly overbought on those high flyers. Workhorse, Plug, Nikola, Neo. Those companies that are right now at the top of the list in Robinhood are going to go through the roof, and they're going to be fine going through the roof. You know how I don't like buying into overbought numbers. So I don't like that at all. But you've got to realize that those are going to happen. And also the other side of that coin, when the correction occurs, fast and aggressive. Look at Workhorse, how quickly it pulled back. Nikola, how quickly it pulled back. Neo's seen some of that same activity. Now you've got Workhorse Plug Play. Or Plug Power is actually doing some of the same things. The earnings season is going to be used to justify that $23 billion, and that is only going to make these moves a little faster and aggressive. The 2 simple steps, trailing stops, as I've been talking about, and then limit orders on the new positions. Here's one of my favorite stocks to look at. You know this one, Camping World Holdings. The stock has gone, if you looked at it back, if you bought it back at the bottom, you were buying it around $657. It's up to $27 right now. If you just bought it in middle of May, you're up almost 200% on this stock. And it made sense. It's a high flyer. Look at the overbought readings that you had for over a month here. Literally, the stock was on not even the rail because there's your 20-day, just shooting higher and higher. This is where you put in that trailing stop and say, hey, 5-10%, I want to get out. Maybe it's 3-5%. You get exercised out and you put in your next limit order. That's how you trade this wall of worry market. Make sure you're loading up some questions right now. I'm going to get to the free flow part in just a second. And there you've got it, Zachary. Workhorse, Plug Play, Nikola, Neo. When you look at these stocks right now, when you look at those 4 stocks, and let's take a look at just Nikola. because we saw actually that upgrade, and you're going to see some downgrades also. But this is going to be, and that's another thing to point out right now. And I'm going to go to the camera just so you can see, and I can wag my finger a little bit. When I looked at my list of upgrades and downgrades this morning, it was longer than, I don't know what. It was a long list. I've never seen the sell side analysts this active in a market. Realize that that's going to cause some of that churn as well. You're going to see companies like Nikola that are going to get a downgrade. It's going to come down over the next 3 or 4 days. You're going to see it pull back 15 or 20% because everybody focuses on that headline. That's where having that limit order in and saying, I need to buy this stock at X. Whether it's, we're looking at Nikola right now. We go back to the screen here for a second. Whether it's $40, if you targeted it when it was $70 and had your trailing stop loss in on it, you get kicked out of it when it trades down to 65, let's say. Actually, it'd be around 77 if you're dealing with a tighter one. And then you've got a limit order at 40. Look at the bottom there. You hit 40 with the 50-day moving average. Use that 50-day as your trend line that's going to put your limit order together. Boom, you're in again. The stock goes up to $55 the next day. So it looks like, and you're right, John, it's a business plan. But what the hell did Tesla sell when they started coming out with their plan? They had a plan to build out infrastructure. They had a plan to get into people's garages. That's what Nikola is doing right now. They've got a plan to get that infrastructure built, and they've got a plan to get into UPS, FedEx, other delivery services, regional trucks, so that they can actually become effective with that infrastructure. It is one of those situations where everybody's taking a little bit of a leap of faith. And yes, this is a Robinhood favorite if you look at it, especially when you had that offering. Everybody went nuts about it. It jumped up the list on those Robinhood stocks. But at the same time, that puts it in play. I had a funny thought last night. Robinhood, and somebody just pointed out, I'm not going to scroll up through it. Somebody pointed out that investing is like a game right now. Investing is exactly like a game. You've got people that are looking at their phone as if they were playing Candy Crush 4 or 5 years ago, looking at it, addicted to what's going on with it. That's what's causing these hyperbolic moves. They're not even parabolic. They are taken off through the roof. And it's the same thing that causes these pullbacks that are very fast and aggressive. Don't play the game. Use your trailing stops and your limits. Nikola right now, one of those stocks with the test of the 50-day. I think we see it pull back again down to 47.5 or so. Maybe you get down to 45. This stock is going to be on a longer-term trajectory that leads up higher. When you look at NEO, and let's look at just a couple of these together real quickly because I know they're going to be asked about. You look at NEO, another one of those electric plays, has taken off, shot through the roof. Up at $12, it looks a little lofty right now, especially the way it's taken off. But my goodness, a $10 or maybe even a $9.50 limit order on this starts to look attractive for someone like me because I pick it up before it shoots back up to that 13 level. Place your orders according to what you're seeing in the charts. Even go with an $8 where the 20-day is and you gapped up from. That's one of those situations. Thank you for the brighter bars. Sorry about that, guys. Let's get those up. There we go. And spread out for you there. If you look at this, this is just one of those situations. Chris, you just nailed something that's very important too. I just watched Muhammad Al-Arian a little bit on that. Let me bounce around to that in just a second. Got the brighter bars for you guys. So Nikola, let's go back to that since you may not have seen it. Looking at that, you know what, like I said, the 50 days in play on this, you start to use these trends to formulate what you're looking at. Workhorse is going to be a little harder to do because it's so new. You've got fewer trends, obviously, that you can start to follow in terms of that run up. And by new, I mean this run up. Its stock's been around for a little while. They've been building this up in terms of the plan. Cincinnati Company, I know I mention that all the time, but about 15 minutes away from where I am right now. But look at the $10 level with the 20-day moving average sitting right there ready for the trader's trend line to give it a little bit of a support. You see some downgrades on the stock, obviously, because people are going to lock in and say, hey, we're going to take profits on it. Those analysts are very, 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 very active right now. That's what you watch. And that's how you keep those profits in your pocket and build them. Let me move on, and then we're going to go right to your questions. My stock of the day. Same stock. I didn't not post another or paste another one. Camping World Holdings. Whether it's my walk down Main Street whether it's talking to friends. I've got a friend that had 3 different trips planned: Spain, Alaska, and I forget where the third one. All got brushed off because of the COVID-19. Went out and bought a $60,000 camper, equipped it at the Camping World. I mean, went the whole 9 yards. This is what's happening. People are putting in pools. People are going camping right now. Camping World Holding comes back down to its 20-day moving average. Last time we saw that, down at $21, runs to 28. The stock's going to have a good earnings season this quarter, so you've got that to look forward to. Their activity has been off the charts in terms of sales. Right now, when you look at the volume, it's traded off a little bit lighter here, out of that overbought territory. If we look at it, traded down to a 15. It is a Marcus Lemonis stock. He owns Camping World. I love watching the profit. I think the guy is one of those genius that comes in and does it his way, because his way is the right way and it makes money. I actually had a Camping World store about 15, 20 minutes away from me that they closed down. And when they closed it down, I thought about it. It didn't make sense, but it made absolute sense, because there's a Bass Pro Shop about 5 minutes from it. There's a Cabela's, saturated market. And that's what they ended up saying about the store. This is a stock that's well managed, but more importantly, it's in the right place at the right time. People are going to be going crazy to get outdoors, and it's not going to end when August is over. People are going to want to be getting out and about through the rest of the year. You can do something. Yeah, I can winter camp. I can go out and camp and ski in my camper. People are going to start thinking of doing these things, because right now, if you go out and travel from Atlanta to Massachusetts, guess what you have to do? If you check into a campground, you're supposed to self-quarantine for 14 days. That's going to be a pain in the butt, a pain in the ass for the next couple of months. People are still going to want to be getting out and doing this when they can after the season's over. Camping World Holdings right now, I look at it bouncing off that 20-day. We may see a little more play when the market cools down a little bit, but this is a stock that's going to $35 to $45 here in the next couple of months. Earnings season's going to help them out a great deal. With that, let's get on to some of your questions here. We've got about 10 minutes or so. I always try to get through these a little faster, but the financials, where? Guy is asking. Financials are in a little bit of trouble right now, guys. The financials are failing to pull forward. You saw on the chart that I showed you from that Bloomberg article that there are right now, you've got companies, whether it is Wells Fargo, JP Morgan, Citibank, Capital One, when you look at the financials, American Express, they're all in a bit of trouble. It all comes down to whether consumers are going to keep pumping money into the economy, whether we're going to see tightening of the belt. American Express is showing that their balances are going down. People are paying off their credit cards. Same thing's going to happen with Citibank and all these credit card issues, Capital One. The financials, though, are in some trouble right now. Normally, we'd see them rally. Look at the 50-day, has been in play for the last 2 weeks on it. I've been watching it very, very, very closely, because this is one of those indicators that people use as we head into earnings season. Next week, huge for the financials. Look at the individual companies. I go through the same ones every day. It feels like Citigroup right now bounced off the 50-day. Bank of America tried to make that move back up to the 50-day, and it's just kind of bouncing around there at $23. This is a group that's going to lag the rest of the market through the rest of the year right now. It is one of those situations that I think you need to, at minimum, steer clear of when we talk about sticking with the winners and not going with the, avoiding the losers. It's, again, a situation that I think that the financials have to be put into that. We talked about the quarantine with the travel stocks. I think they need to be in quarantine with the travel stocks. And I'm going to use that to segue over to jets real quickly, simply because we saw that in the chart. The airline stocks obviously got that huge run up. Here's your June 5th, 6th. This is where we actually, I think it was 5th and 8th right there. There's your 8th. All of a sudden, we've seen this whittling down. United coming out and making that announcement yesterday. American Airlines has been doing some similar activity in terms of the trending below that 50-day. Airlines are back in that quarantine box as far as I'm concerned. I still can't figure out Carnival Cruise Line, to be honest with you. This is one of those head scratchers for a trader versus investor. When you look at the cruise lines, sure, they're coming out and they're trying to put together some protocol for their safe travels. But at the same time, how many people are really going to go out there and start loading up those ships? I mean, it is a really big question that needs to be answered. And if you look at what's happening with airlines, sure, they're picking up some more travelers, but they actually saw a drop from last week right now. Last week was 4th of July, guys. I mean, more people were going to travel. So it's one of those situations where I think that you have to watch these travel related stocks. Expedia, and I always talked about Expedia being a surrogate or being one that's going to continue. You can see the continued strength there. Expedia doesn't have the overhead of the plane sitting around, the boat sitting in docks. At the same time, they need to see travel pick up, and right now that's not happening. Trip.com is another one that I look at and say, okay, this is going to turn into a bit of a short position right now because, again, it's breaking through that technical support, yada, yada, yada. I've given you more than enough on the exactly what is going on with the banking and the technical sector. Let's look at Alibaba because that's come up here. Alibaba is, again, lighting it up. The Chinese market, it's going to open up higher today. It's going to move higher today. China has made it clear that the economy is getting better. And as a result, it's a situation where you're going to see Alibaba, which is one of those great proxies for the Chinese economy when it comes to what's going on here in the United States, continue to rally here. So if you look at the perspective of Alibaba, the only risk here I see is something happening with China and kind of going off of the rail. And quite frankly, I think that's too big of a political hot button for the administration to take on right now. Pompeo's comments yesterday really started to focus a little bit on making some divides, but that was looking at TikTok and a few others. Keep looking at your Twitter, at Pinterest, at some of those non-social, if you will, or non-political social platforms. They are going to continue to surge. They're absolutely. APT. We've got Ken asking about APT. Yes, started looking at APT. For those of you that don't know, they basically make disposable gear. Think about hazmat type of suits or disposable gear that we're going to use. Obviously, as the COVID-19 starts to make a resurgence, this is going to be one of those companies that's going to come into demand for more products. I like the trend here. The 20-day moved up. When you look at the option activity, and I pull it down like this so you can see it, very lightly traded options, very little open interest. So it makes it hard because the bid-ask spreads are very wide on a company like this. That's something you want to watch right now, everybody. And that's the reason I talk about the options for a second on Alpha Pro, because when you look at the options market, the premiums are high. The bid-ask spreads are getting higher right now, especially as we head into earnings season. This is a stock, or these are the type of stocks that you look at and say, I want to play that trend and use that trailing stop limit and that target, that limit price target rule to get in and out of positions. I like the trend here. I think you're going to see more emergence, obviously, as COVID-19 starts to make more of a resurgence here. And remember, you got Anthony Fauci out there saying the comment that I thought that was huge over the last, well, it's the biggest comment I've seen in the last few weeks. He's actually saying we're not a resurgence. We're knee deep in the first wave still. And I thought that comment was huge, especially when you see what's happening with the reopenings here. Let me get to more. What's your thought on eBay? eBay is one of those stocks, folks, that whether you're eBay or Etsy, eBay is going to continue to benefit from the fact that we like to sit around and shop at home. You've got companies like Levi, like Nike, like a few others. Unfortunately, not Brooks Brothers. I don't know if everybody had to have seen it. Brooks Brothers filing for bankruptcy yesterday. Actually, yeah, it was yesterday. eBay is one of those companies that is going to continue churning. A year ago, if we go out a year and look at a monthly chart, and I think this is what's interesting, this shows you the tail of COVID here. In 2018, you had eBay going straight down again. And then you had a resurgence, and it started to come right back down a year later and start to follow that same trend. Support at 28. And this is the reason I know this is because I looked around and actually was using this as one of my fast profit trades. And look at what has happened. And this is the result of COVID-19. eBay is one of those nice, and Etsy's the other one. I keep telling my story about the $3,000 canoe. Look at Etsy and what's happened. It's similar to eBay. It's turned into a storefront or a retail front for people selling stuff from their home, people shopping from their home. You can't get any better than that in this particular economy. And I think the way the new economy is going to be feeds to Etsy and eBay and others like it, I remain bullish on those names and think that they're stocks that you can hold as a long-term holding there. Any chance Costco can go down so I can get out of my expiring credit call spread? You know, it's impossible for me to give individual advice, unfortunately, and say, it's going to do this. I think Costco has reached a point where it's extended. If you look at the trading range here, 320s are high on this range. You've seen it a couple of times. Costco's gotten a spark here. You know who else is? Kroger is starting to get a little bit of a kick in its step again. Big down day yesterday, but look at the 50-day and the 20-day, probably going to be there to pull it up for some support. You're seeing a resurgence, obviously, of people going out, and whether you've been in a Kroger or not, people are starting to buy toilet paper again, and people are starting to buy these things. I love the fact that the Kroger is treating things right and making you wear masks as you go in, and then making you use the hand sanitizers. The retailers, I think, are going to have some thin margins here as we go into the year or into the earnings season, and usually you see your retailers late. Costco is one of the names that I think is going to start to play up because whether you know it, I don't know if anybody's looked at, everybody here has looked at their business strategy. Their business strategy is to have relatively the same margin on every product. So they make everybody adjust what they're selling the product to them so they can maintain a margin. I think that's where Costco starts to pull out ahead of everybody here over the next couple of weeks because that margin does come back into play. Keep an eye on that. If I do see it pulling back, you look at Costco and maybe it finds somewhere around a 308 print before it really starts to find some strength again. And you've got, I'll note, the 50-day starting to turn up, which is always bullish, and that 20-day is confirming it. I'm going to flip over to the chat for 2 minutes here, see if I can find a few others. Ken's asking why TJX isn't moving higher. TJX isn't moving higher because everybody's worried about getting out in the stores. Kohl's opened up, started a little more aggressively opening stores. They got an upgrade yesterday because of that. If you look at Kohl's stock, KSS is the ticker symbol on there. It's kind of a match to TJ Maxx, and you can see the bump that they got from that upgrade. They're being aggressive and kind of taking a damn the torpedoes move on it, and it doesn't matter if people don't come out to the store. TJ Maxx is in the middle of that spectrum of discount retailers, not like the Ollie's, which you look at and still is kind of floating up there, finding some strength in its 20-day moving average. But if you look at TJ Maxx, it's going to take a little bit of time for the people to get back into shopping. To put it simply, Kohl's is taking that, like I said, damn the torpedoes approach. We're just going to open things up and hope people come out. You get a little bit of accolades because people figured that this is going to be a bump. But at the same time, they have to get into stores. Kohl's is maybe a little bit of a step. They're still in the same spectrum color, but there's still a little bit of a step below TJ Maxx in terms of what they offer in the stores for discounting. TJ Maxx, I think, is going to be a little bit longer for people to come to the store. I think it's still a long-term hold on that stock, though. SC, another one of those that C Limited, Peter, Zachary has pointed this out. This has just been a great trender when it comes down to the 20-day moving average. Here's a great example of trailing stop limit type of strategies when you use a stock like SE. This stock has just continued to go through the roof. Zachary gets a credit on this one, pointing it out. It's a stock that's going up to the new highs right now. Again, I think you stretch up maybe towards that 125, 130 area or so. And then it makes, if I'm trading it myself or trading it in a service, I look at it and say, maybe this is a trailing stop area, and then throw in a price at 115 maybe or so as a limit price. Even 110 starts to look attractive. And on the next downswing, you pull it back in again. So that's one of those that you look at from the perspective of, this is a great example of keeping that money in your pocket as this market goes higher and finding trading opportunities with the same stock. The same could be said for Zoom, guys. We haven't talked about Zoom in a while. It's been kind of plateauing here. I think Zoom's story has kind of gotten out there. Now they're turning into a company like Slack, which work. You've got to make something new. You've got to start pressing. They were the new kid on the block here, challenging everybody else out there, whether it's Cisco, whether it's Citrix, in terms of that ability to connect remotely. Now you've got more of a proving point for the stock. I think you lose some of the volatility. Not saying that Zoom is out in terms of a tradable stock, but it's definitely one that I think is going to slow down. Maybe the sizzles come off this bacon. That's the way I put it. I would put it. SE, if you look at, and let's look at Shopify, because Shopify obviously making new moves. And this is one of those stocks that just, booms up and then you get that opportunity to pull back. Little people don't like it maybe because of the $1,000 price tag. But again, think in percentages here, folks. Do not think in terms of price. And that's sometimes hard to say, but at the same time, something to keep in mind. JD, you have to mention in the same mention as Shopify. JD, I think, looking like it's ready to make a surge here, where Shopify is kind of taking a break. Caterpillar is one that's thrown up a lot right now. Industrial struggling. Caterpillar getting a little bit of benefit from the idea that we're going to have an infrastructure deal going on here. If you look at it, lots of resistance at the 200-day moving average. The 50 days coming up with support, but the 20-day right now is not confirming that rise in the 50-day. It's a stock that's probably going to work to find its way, and you've got a little bit of a pennant here with the higher low and the lower high. You've got a battle ground that's going to happen here, probably between 125 and 130, and the winner is going to take the direction here. Right now, it's going to come down to earnings, and a lot of this is going to come down to, folks, the idea that we will have an infrastructure bill or we won't have an infrastructure bill. Keep an eye on that. That is a political hot button that you're going to see coming into play. Fauci's, let's not get into New World Order or globalists. He should not be. You're correct, and David, let's keep it to stocks, right? I mentioned Fauci with his comment, and maybe that is one of those situations I should keep away from it. But if you look at it from the perspective of, what's going on, obviously the guy's trying to do what's best for everybody. And you know what? We've got Governor DeWine here in Ohio that is seen as the same way, kind of a dictator right now. And it is it's going to be a political battle along with the mask battle as well. So I really think that you're probably going to see 86% of you with the mask, 13% saying that no masks. So you know what? Wear a mask when you're around your parents. That's for sure. Mercado Libre, MELI, Amazon of Brazil. You can't look away from the trend. This is a stock that's going to maintain just like JD, just like SE, just like Amazon. This is one of those, and especially because they're in a different market offering different expansion. I like Mercado Libre. 9:29, guys. You got a minute before we start trading. That means I'm going to let you go. And you know what? CWH, you know what, Derry? I like CWH to go up to 35 or 40 or so. This is going to be a stock that's going to rally strong. They're probably going to have 2 quarters worth of good reports because of the activity they're seeing now. I like that activity. I really do. Have a great day, folks. Enjoy yourself. As always, I wish you the best trading success, and we'll catch you next time. Thanks a lot. Have a great day.